Hey everyone, Assalamu alaikum. Welcome back to the accounts. So in this video we'll be discussing about trial balance. That what is a trial balance, who prepares a trial balance, and what is the format of a trial balance. If you can recall from the accounting versus bookkeeping video, we have already discussed that a trial balance is prepared by the bookkeeper, right? A bookkeeper prepares the day books, the ledger accounts, the source documents, as well as the trial balance, and then later on the financial statements, for instance, income statement, statement of financial position, cash flow statements, interpretation of ratios. All of that is done by the accountant, right? So first thing is, who prepares a trial balance? A bookkeeper prepares a trial balance. And if I give you a glimpse of a trial balance, so it looks like this, that it has two columns, a debit column and a credit column, and we list down all the accounts that a business maintains in these two categories, and in the end both the totals should be equal, both the totals should match. So this is how a trial balance is prepared. We'll come back to it in a minute. So what is a trial balance? It is a list of account balances at a certain date. So a trial balance is prepared for a certain date, not for the whole year. For instance, for that we prepare an income statement that is for the year ended, but SOFP and trial balance, they are prepared at a certain date, and trial balance shows all the accounts that the business maintains, it was maintaining for that year. So it is a list of account balances at a certain date. Moreover, the reason why it should balance, ideally it should balance, because it verifies the arithmetical accuracy of the accounts. It gives an assurance that there might not be any calculation type of error in the T accounts, in the ledger accounts. That is how it will balance, right? If all the debit accounts, the accounts that have a debit nature, if they match with the credit side, with the accounts that have a credit nature, so it will give an assurance that there is no arithmetical problem in the T accounts, right? So that is why the preparation of trial balance is very, very important. And if it doesn't balance, right, if the trial balance doesn't balance, so of course it will then identify the errors. It will help, it will facilitate in the location of errors. So then the bookkeeper or the accountant will go through the T accounts, the source documents, the day books, in order to find out the errors so that it can be corrected in the accounts, right? So ideally the trial balance should balance. Why? Because then it will tell us that there are no arithmetical problems in the T accounts. However, there are still some errors which might go undetected, and they may exist in the T accounts, in the ledger accounts, and even if they are present, the trial balance would still balance, right? So there are certain errors which might not be revealed by the trial balance, and that we will study in the topic that is errors not affected by trial balance. However, right now, if the trial balance doesn't balance, so this gives us a hint that we have to find out the errors, we have to go through our accounts, we have to check the double entries, and we have to correct the errors, so that the trial balance facilitates in the location of errors, right? And lastly, the reason for preparing trial balance is also that it assists in the preparation of financial statements. As it is a list of account balances, it shows all the accounts that the business has, and those accounts will of course go in either income statement or in the statement of financial position. So it gives the account balances at a glance. Trial balance, so it assists in the preparation of financial statements. So it is important, it is vital that we prepare trial balance before preparing our financial statements, right? Now, how is a trial balance prepared? We have two columns, debit column and a credit column, and I tried to add as many accounts as I could remember for the format of trial balance, that what comes on the debit side and what comes on the credit side. So if you just know the nature of any account, you can easily prepare a trial balance. For instance, if we look at first four items, purchases shows an increase in inventory, and inventory is an asset. Or if you understand purchases from the perspective of it being an expense account, so expenses are also debited. So purchases are always shown on the debit side, and purchases returns, its contra account, is on the credit side. Similarly, sales show a decrease in inventory, or sales is an income, and incomes have credit nature, so they always appear on the credit side, and sales returned, its contra account, on the debit side, right? Then all the non-current assets, plant and machinery, fixtures and fittings, land and buildings, or your plant and equipment, all of that will appear on the debit side, of course, the cost, right? Or even if you are given with the net book value, that will also appear on the debit side. And its accumulated depreciation, which is a contra asset account, a contra non-current asset account, it shows a decrease in the value of your non-current asset, that will always appear on the credit side. Similarly, if you are just given the current year depreciation expense amount, that will appear on the debit side. Why? Because that's an expense, and all the expenses are debit nature, so they appear on the debit side, right? Moving towards assets and liabilities. So cash, we know, is an asset, debit nature, debit column. Bank, if it's the positive balance, of course debit. If there's bank overdraft, then it will come on the credit side in the trial balance. Then we have inventory, of course, debit balance. Trade payables, what is trade payable? It's a liability. Bank overdraft is also a liability, so credit side. Bank loan, again a non-current liability, credit side. Trade receivables, asset, debit side. And provision for doubtful debts, contra asset. Contra asset means it will appear on the opposite side of the asset account, so on the credit side. Then we have capital. Capital increases on the credit side, right? Capital has a credit nature, so of course on the credit side, credit column in trial balance. And drawings, a contra capital account, it will appear on the debit side. Whenever there is drawings in the business, whenever owner withdraws anything from the business, that is debited. Drawings are debited, right? It shows a decrease in capital, so drawings are always debited. Then we have some expenses and income, so all the expenses are debited. For instance, carriage inwards, carriage outwards, both are expenses for the business. Irrecoverable debts, wages and salaries, all the expenses, discount allowed, miscellaneous expenses, all the expenses are shown on the debit side. And all the incomes, for instance, discount received, rent received, interest receivable, everything on the credit side. Lastly, if there is profit on disposal, if it is given to you as an individual balance, so profit being an income will be shown on the credit side, and loss on disposal on the debit side of the trial balance, right? So this is how a trial balance is prepared. If you remember the nature of the account, it is very easy to prepare a trial balance, and ideally a trial balance should balance. However, if it doesn't balance, then for the sake of preparation of draft financial statements, we can insert a balance with the name of suspense account, but only do that if you are told in the question. So whatever side is lighter, we can insert a suspense account balance, and we don't just stop there. We then have to locate the error, and we have to correct the error later on. So that is how we prepare a trial balance.